Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Back doing an evening live stream as I have a 6 o'clock appointment or in about 18 minutes. So I thought I would take this time to do a quick live stream for you, let you know that I got some bad news. I got a couple of notes from mortgage brokers that I know, Matt, the mortgage guy included. Matt, thank you very much for the video. And folks, all I have to say is, well, that escalated quickly. What am I talking about? You have heard me over the last 2, maybe 3 weeks talk about 30-year mortgages, owner-occ, best credit, 20% down, going to 7%. Well, we are officially not there yet, but we got to 6.99 today at par. What par means is no points. Again, this is the best credit, real down payment, owner-occ, and we're at 6.99. This means that for the rest of us, we're certainly in the 7s. It means that investors might be in the 8s. Folks, it is getting real out there. So what does this mean? What does 7% mortgage rates owner-occ mean? Well, it means winter is here. It means winter is here. I think there's a couple of things. First, if you are in a transaction, if you are in escrow, and your buyer or you as the buyer or you the investor do not have a rate lock, you are going to be in for a very negative surprise. If you ran your numbers at 6.5 and you end up getting 7.5, that's going to hurt. So if you are in escrow and you have a rate lock, congratulations. If you like it, lock it. We've been saying that for several months now. You're good to go. You're clear to close, assuming that you like the deal, nothing has changed. If your rate is locked, you're good to go. If you're not, if you chose to float, if you chose to gamble, you chose to risk it all, rerun your numbers. Rerun your numbers. There's somebody I know who was in contract for 432 units, something like $75 million. And let's just say you don't typically lock these commercial properties, at least not till the end. And he's going to cancel the deal. He's not going to necessarily cancel the deal, but he's going to tell the seller he's going to cancel the deal. If I was a buyer in escrow today, I would use this as an advantage to see if I could get a better price, if I could get closing costs, if I can get some kind of credit, if I can get some repairs, something. You have to realize as a buyer today, an investor today, you have the power. You are the pretty girl or the pretty boy at the dance. Everybody wants to dance with you. 6 months ago, sellers were the pretty girl or the pretty boy at the dance. I guess handsome boy, well, whatever. You know what I mean. So it is switched, and it is switched fast. So again, that's if you are in escrow. If you have a property listed today, and you have a low mortgage rate, more and more people are just going to take their properties off the market. I meant what I said earlier this week. I believe on September 15th, which is 1 week ago. It is 1 week ago I said this. Phase 2 of the housing crash has started. Phase 1, demand destruction. We've already lost 18 million buyers at 6%. How many buyers are we going to lose at 7, 7.5, 8? We are going to see unheard of demand destruction. However, I believe, because the Fed broke housing, that we are going to see unheard of crazy supply destruction. And that is phase 2. I believe phase 2 of supply destruction actually started in August. What a lot of people missed in the August announcement, there are a lot of channels celebrating the median home price drop. What they missed, and actually what I missed in my first read of the report, so I missed it as well. They're not alone. I missed it. I own that. Inventory dropped. And that was August. That was August. Look at where we are now. We're about a point higher than August. It is going to get quiet. Very quickly, we are going to get to a point where there are really low listings. And again, we'll have very low demand as well. We are very quickly in a week ago, I thought phase 2 of the housing crash would take us below 4 million transactions in January or February. I'm here to tell you right now, it might be November. It could be December. This thing is going to crater. We are going to be in a housing-led recession. The housing market was in a depression already. It's going to be dark. Now for prices. Again, what a lot of people don't realize about home prices is they are sticky. They're not like stocks. They're not like NFTs. They're not like trading cards. They're not like anything else because they exist on the Maslow's hierarchy of needs, whatever that's called. Maslow's, that's what it was. Maslow's hierarchy of needs. You got water, then you got food, then you got shelter. It is, families are going to run calculations. And I thought the move-up market was dead at 6%. The move-up market at 7 or 7.5 is non-existent. The housing market from September 15th, which I called last week, until March 15th, not much is going to happen. There will be some markets that feel pain. Certainly markets that iBuyers are in are done. I think the iBuyers very quickly run out of cash and they're bankrupt. So if you're in Phoenix and they've got 2,000 home listings, that's going to be a problem. If you're in Vegas and they got 1,800 listings, that's going to be a problem. That's not most of the country. Most of the country don't have iBuyer problems. Most of the country is just going to slow down. So what to do as an investor? You are interested in being an investor. Well, it's always a good day to do a great deal. You know, that sounds cute to say. But for most of you that are just trying to figure this out, this is a time to double down on doing the work. What is that? What do I mean? You always heard me about focus, buy box, daily discipline, run your numbers. But the next 6 months, they're going to be weird. I have no idea what's coming. And I look at my market every day. I have no idea what's coming. So what I would do as a brand new investor is I would get geeky on my spreadsheet. What does that mean? So let's say you find a house, 123 Main Street. You put it in your spreadsheet. You put it in at 6.99 or 7.99 or 8.99, whatever rate you put it in, And you find out it's a 4% return. I want you to do this. I want you to play with your spreadsheet and understand how the numbers work. I want you to take this 4% yield and I want you to make it 8% by changing one variable. What does that mean? Well, here's the deal. When you look at your yield, with what I teach and talk about, you can change all the variables. First thing I want you to do is I want to change the price. How much does the price have to fall before your yield doubles? Okay, that's one row. Row number 2, how low does the interest rate have to go? Price stays at the original, so it's not the lower price, it's the original price. How low does the interest rate have to go for the yield to double? Third line, go in and assume the seller pays closing costs, so that goes to 0, and they buy your rate down 0.5 point. This is the time, and Rodrigo, thank you for the super chat. That's very, very nice of you. I appreciate that. This is the time to understand the math. The beauty of the spreadsheet, the beauty of the yield calculation that I teach and talk about and use to this day is how simple it is. You have the ability to change very little variables and really goose your return. This is the time. And then lastly, what I want to say before I go off to my 6 o'clock call, which I want to be early for and be respectful of the host, is do the work. Please follow your market. I believe that most markets will be flat to down inventory. But what I just said should mean absolutely zero to you. You have your buy box. You do your work. You do your tracking. In the winter, the housing depression, you will find amazing deals, but only after you do the work. So again, I am tasking you to figure out how to make your yield double. I am imploring you to keep doing the work. This is not a time to sit down. The housing market is weird. I have not lived through an environment where rates more than doubled. I have not lived in an environment where rates went up 1% in a month. This is crazy times. And they're going higher, I am afraid. So folks, do the work. If you want, buy the course, be a part of the community. You get in the private Facebook group with other amazing people. In the winter that we are in, you need to be around other people doing the work. Don't be that person trying to do this alone. Too much negative information, too much noise. Do the work, get around other people doing the work, and you will be in a much, much better headspace. So at the end of the day, take care of yourself. Rodrigo, again, thanks for the super chat, man. I appreciate you. Take care, everyone. Bye.